Hello and welcome to another trading day right here in Lagos, Nigeria. This is what's coming up in the next 55 minutes. We get an outlook for lending rates in Nigeria as we hear from the Monetary Policy Department of the Central Bank. And the World Bank Vice President for Eastern and Southern Africa arrives in Zimbabwe for a 4-day visit. Plus, Egypt signed 7 MOUs in green hydrogen and renewable energy with giant global developers. Hello, welcome to the program. I'm Ladi Williams. First off, let's get a check on the markets now, starting with the oil market. Now, we'll see prices early today eased after a larger than expected build in U.S. Crude stockpiles stoked worries about slow demand, while signs that U.S. interest rates could remain elevated for longer, also adding pressure to the prices there. So we see $83.46. That's what we're getting for Brent crude, 0.3% down. The cheaper version there, WTI crude, $78.24 a barrel. That's down big, about 2% this early trade. U.S. crude oil stockpiles rose while gasoline and distillate inventories fell last week as the refiners ran at a below seasonal lows due to pressures there with the Houthis attack on the Red Sea, and that's impacting logistics when it comes to moving oil around. Let's get a check on the grains market now. We're seeing futures fell today and hover just above a 3-year low. That's for the grains market. We see wheat, that's up 0.5% at $5.77 for half a bushel. That's in the green. Soybeans on the other side, that's down 0.4% at $11.40 for 3/4 of a bushel. So we see corn, that's up 0.2%, $4.29 for half a bushel. So we're seeing mixed sentiment right there in the grains market. But at the end of the day, we know what drives sentiment right there in the grains market. It's either disruption to supply or we're getting oversupply in the market at this time. Back here, the Independent Petroleum Marketers Association of Nigeria, IPMAN, says it can no longer continue to do business under the hostile environment put in place by the NNPC retail. The national president of IPMAN, Mr. Debo Ahmed, spoke to the press after an expanded meeting of its national officers, says the NNPC retail is a competitor, supplier, and regulator to IPMAN, a situation which is threatening the businesses of its members. Take a listen.
It's only in this country that you have the supplier, the provider, at the same time as a retailer. It doesn't happen in some other countries because NNPC Retail is a limited company like we independent marketers are. All our members are independent marketers. When NNPC want to go into limited, they're supposed not to put us under NNPC Retail because they are a competitor. Even who knows whether they have been taking our product and selling it. Because when our product comes to them, you hardly get it. You hardly get it. So what is happening? So they are our competitor, and at the same time, our supplier is only in Nigeria that you can see that type of things. The government too should look into NMDPRA. We have a lot of bridging claims which is pending in NMDPRA. NMDPRA is getting money from NNPC. And NNPC is a limited liability company now. They have declared their profit. They have done their annual returns. So we expect that the money is with NMDPRA. On this incessant increase in tariffs, NMDPRA is very funny of increasing tariff. It will discourage a lot of marketers who really want to come into the business. Because when you increase tariff today, tomorrow you come back again and increase tariff. So they should find something to it. And the one they have increased, they should call marketers, stakeholders to discuss on it. Because if not so, when stakeholders don't, cannot afford it, it will return to having the scarcity of products.
Well, as the CBN moves to stabilize prices at this time and also stabilize the FX market, we got that jumbo rate hike by 400 basis points for the MPR. And definitely, we've got a lot of reactions, trailing that hike at this time. But let's hear now from Dr. Mohammed Tumala, Director, Monetary Policy Department at the Central Bank of Nigeria. Great to have you on the show.
Thank you, Ladi. Good afternoon.
Fantastic. So we're seeing 22.75%. That's the new NPR from 18.75. Cash reserve ratio, that's moved to a record high of about 45%. Asymmetric corridor, also we saw an increase there. And, looking at all of this, we're seeing lending rates are getting higher and higher in Nigeria. And I want to know about how the CBN is thinking about the risk of loan default with most of the hikes that we're seeing right now.
Yes, Ladi. The central bank is very much aware of the concerns that should be around the non-performing loans. And so one of the things the MPC would review are the prudential ratios of the bank at current levels, and also provide some level of shock to see how resilient will they be at different levels of shock. So the system is awash with a very substantial share of foreign currency denominated loans, now standing at about 60% of their total loans. So FX stability in the FX market, or instability in the FX market is a broader risk to the banks with respect to the loans out there. So MPC thinks that stabilizing that market and generally prices is a better option for the banks. But of course, they have been advised to increase their buffers. They have been advised or prepared to recapitalize to safeguard their capitals, and also the application of FX gains. That has been a concern because there has been a lot of profits declared because of FX revaluation gains. So banks have been, their attention has been drawn to take this opportunity to create buffers for emerging risks.
All right, so definitely, at this time, we know there is a risk, when it comes to, interest rates. We're seeing even right now the talks in the global markets of possibility of, rate cuts coming in 2024, but we don't have, clarity, when it comes to that. But from the view of the CBN, is there, at what point are we looking for, are we projecting some kind of peak for interest rates hikes in Nigeria?
Well, the system is evolving. By our understanding, the knowledge we have from the various simulations and we have done, we needed to take that decision now if we would want inflation to trend down to the levels we would want them to be. We are very much aware of very high, inflation levels, in advanced economies and our trading partners. We are very much concerned about the inflation differential between, Nigeria and our key trading partners, and that affects our real exchange rate. We think that there are going to be delays as far as further rate cuts are concerned in advanced economies, because inflation is trending down, even though they are still far above their inflation target. So we think that there might be some delay, and that might come as some good news to our economy, particularly if you look at inflow of foreign investment. So they are not likely going to raise rates. That is our thinking. But cuts are also maybe delayed. Now, investors are looking at our real interest rate, and we are still, negative. Is the desire, of course, for any economy to have a positive real rates. But then we also looking at the trade-off between, increasing rates and having to put the economy into the direction of substantial decline in output.
All right, definitely we see there's a cost of living crisis right now. We're seeing consumers squeeze on all sides now. And also we're seeing businesses, struggling at this time. And we know the CBN, you have a lot to do at this time when it comes to FX market stability and, moderating prices or keeping prices stable. But with the rate hikes we've seen from the past, leadership into this one, is the CBN scared at all of tanking the economy?
Well, any policy maker will be watching. So many things. Not only, inflation. You'll be interested in growth. After all, stabilizing the objective of having stable prices is to have sustainable growth. So we think that you can't have a sustainable growth without stable prices. So, there has to be some kind of pain period for this, and on the other hand, you are also seeing employment is ticking up. So the central bank is concerned about, of course, the current situation of living in Nigeria. But then what is more disturbing is for us to do nothing and have the economy in a far deeper, mess than we are now. So the previous cuts have not given us, the desired result, and this decision is coming a little bit, do I say timely or late, but we needed to act now. We are very much aware of the trade-off between growth, but then it is for a better economy. It is to be able to provide that foundation that is required to build the $1 trillion economy that we all desire as Nigerians.
We've seen a lot coming from the CBN, at this time when it comes to reforms in most of these markets. And we're all trying to get back foreign investor interest, But from what you've seen so far, can you give us any indication if we're seeing, foreign investment starting to come back to the country? And what's your outlook for that in 2024?
So even before the meeting, we have had, there is no week that passes without a team of foreign investors coming into the country. And we have had a lot of meetings with them. There is increasing interest in coming back to Nigeria. And in fact, immediately the MPC announced its decision. A group of investors actually made a call and required a conference call with the governor, which happened yesterday. So there is a very strong interest in Nigeria. And you have seen, of course, foreign investors coming back into sub-Saharan Africa. They have come into two economies now. Nigeria is the next destination, and that is what the central bank is currently occupied with, trying to support the fiscal authority also to create the enabling environment for all investors to be in Nigeria.
All right, definitely. I wish you the very best, because I know there's a lot before the central bank right here in Nigeria. Thank you so much, Dr. Mohammed Tumala, Director, Monetary Policy Department of the Central Bank of Nigeria. Thank you so much for coming on.
Thank you, Ladi, for having me, and have a good day.
Thank you. You too. All right, now let's drive down to other issues now. We see with the volatility in the FX markets, we need to get an outlook for investments and regulation, in the country. Joining us for this is now Noble Obasi, team lead, private equity capital market at Strand & Bland. Join us right here in the studio. Great to have you.
Thank you very much, Ladi.
Yeah, I'm sure you heard from the director there, from the Monetary Policy Department, and definitely we know the CBN has been doing a lot, at this time, trying to stabilize, the FX market. And everyone, is blaming one thing or the other for what we're seeing, right now with the Naira. Apart from, lack of the kind of inflows we want to see when it comes to foreign currency into the country, what else would you say is responsible for the disruptions we see in the FX market?
Okay, thank you very much, Ladi. Again, I would say one of the disruptions that we see in the FX market could be as a result of Nigeria being so much import dependent, right? So we see a whole lot of products being imported, right? And I'm quite sure that I don't really think that there is any economy that the FX is going to be really stable if there is a whole lot of import dependence, right? And that calls to mind the fact that if we in Nigeria, the moment we start being a productive country, I mean, what I mean by a productive country, right? In terms of producing, like re-engineering our industries, right? The moribund one, resuscitating them for them to work, right? Getting our products, for us to, import those products. There'll be a sort of a balance, right, in terms of the, FX instability, because, again, money is going to come in from, from those products that we've shipped to exports, all right? And again, and that reason why we could say that there's a little bit of, FX instability. I mean, it might be minute, but I think it's one of the reasons is this Japa syndrome, which dovetails back to the country being sort of
because Japa requires FX. You need to get dollars if if you're trying to relocate, and
exactly
when you see a lot of that happening at the same time, definitely that's a lot of pressure.
Exactly.
But looking at the different segments that somehow are supposedly to blame for what we're seeing, in the FX market at this time. We've seen issues with, some cryptocurrency exchanges, the P2P market. That has been blamed, for what we're seeing right now, the manipulation, in the market. So talk to me about the different segments now, because we also heard issues about the banks. Yeah. Some have come out and say, oh, the banks are, keeping too much dollars when they should actually be giving it out, at this time. Talk to me. Who exactly is to blame? Are these segments really to blame, for what we're seeing right now in this market?
Okay, so again, who is to blame for the FX, currency, instability, right? I think, again, I think it's everybody, and I will say this, right? When we look at, the inflows that come into the country, right, in terms of the diaspora remittance, right? We have a whole lot of diaspora remittance. Again, how is the regulators, how are they trying to harness, that sort of segment, the sort of inflows that comes in, right? I mean, there's really no legal, regulatory framework to, really guide that sort of, sector. And I think in the past 4 years, right, our diaspora remittance has been about $68 million. That's a whole lot. In fact, that's even, counted to be more than our, GDP, right? Again, who is to blame for that? And is there any regulation, that is, inflowing that sort of money into, that's, regulating the inflow of that sort of money in the system? That's why. Then let us look at internally, right? Again, we are so much import dependent, right? We're so much import dependent that we import the least thing as simple as toothpick.
Don't say toothpick. Don't say toothpick. But yeah, it has to be said.
Again, right? I mean, these are one of the factors, right? Again, are we harnessing, the critical sectors in the economy? Are we harnessing it the way it should be? Let us look at the creative industries. The music industry, the the entertainment, the designs, the graphics industry. For example, these guys, I mean, I'm talking about the artists, our entertainment guys, the celebrities. They go outside the country to rake in a whole lot of dollars. There's a whole lot of, inflow, right, going on within, that sort of industry. So what have we done? What has the regulators done to channel this inflow back into Nigeria, right? Again, what the regulators can actually do is look at their, the industry, right? Look at how you will be able to support them to grow, right? Perhaps set up a fund, for them to, to show that, oh, you're supporting it. Then you can harness it properly, by even taxing. I mean, again, these are ways where FX is going to come in, and the economy will be able to stable. Yes.
I'm going to ask you about another issue right now. I don't know if you've been following the issue with the Binance, cryptocurrency exchange. There are reports that two of the executives have been detained, in Nigeria because Binance is the P2P market is being blamed, for what we're seeing in the FX market, and bringing it back to regulation, at this time. How can we identify what these guys have done wrong, when it comes to the FX market? Do we have regulation and rules set and to be able to tell that these guys are not playing, to the rules of Nigeria?
Again, cryptocurrency, cryptocurrency and digital assets, right? Those are the segment where the regulators are not really so sure that they're segment they really want to dabble in. They don't really want to dabble into, right? Because of a whole lot of complications, right? But I think the world is actually moving, towards digital assets and all, right? So again, this calls to mind. This calls to mind the situation where regulators need to really understand how these guys play within that market, right? And fashion out ways to harness all the all the juices that comes out from that from that sector, right? That sector is moving a whole lot of there's a whole lot of millions of transactions that goes into the digital.
The government said about 20 something billion was sent out of the country through Binance.
Absolutely, that's a whole lot of money that goes out, right? So what are the regulatory framework that we are putting in place to ensure that we have those guys are sanitized? What are the regulatory framework that has been put in place to ensure that money even stays within the country, right? Again, how are our regulators really understanding that the world has moved past traditional means of the transaction, the bank and all, and into digital assets?
And I want to believe Nigeria understands that, because we have the e-naira, even though we're not hearing much about that. But with the new leadership now, the CBN, I hope we're going to hear more about the e-naira going forward.
Yes, well, to be honest with you, I think CBN, I give kudos to them. They are doing quite well in terms of their circulars and trying to stabilize the foreign the currency instability, right? I would think that one of the problems which I can highlight in terms of the circulars is they are very well thought out circulars. They are circulars that on the very long term is going to bring down the currency instability, right? However, is there the willingness to push through all the mandates of the circular, right? So yes, Binance, some of their EDs have been arrested. Again, we hear from all quarters about holding of dollars, huge, humongous amounts of dollars. What are they really doing to ensure that those dollars come back into the market, right?
But legally, can we really detain those executives of Binance?
I mean, if they are found fraudulent, I mean, there are laws that back, the arrests and the detainment. Yes,
right.
Yes, you can.
But do they have rules that they can actually play by, at this time? And what is your recommendation, to get some stability when it comes to this market? Because fine, we understand the crypto market is here, and it's a decentralized platform, so it's not easy to regulate. But what kind of framework should we be looking at this time?
Okay, fantastic, Glady. So I'll tell you this, right? I would think that in terms of cryptocurrency and digital assets, right, we have not really have a whole hang of how it's appraised, right? So this calls to question where the regulators, right, all the necessary regulators, the CBN, the Securities and Exchange Commission, right, and stakeholders, critical stakeholders, which may be the youth, because the youth are very, very technologically savvy. They have to sit down, they have to come together, right, to fashion out ways, right, within which to harness this, because the world is moving. Okay, look at the IMTO. When there's a whole lot of fees, paid in terms of diaspora remittance. You see people, going through the other means to ensure that money gets to their families. And most of these diaspora remittances are for social support, which shouldn't be. No, I understand that perhaps those abroad could send money to take care of immediate needs.
Because you need to pull abroad to send you money.
Exactly.
Because he's not there for nothing.
It's exactly. But there's ways we can still harness it. So all those inflows coming from abroad, do you know that the CBN can actually say, you know what, you guys sending money, right? We can identify an investment platform where you bring in your money into, right? Once the dividends start yielding, you can use the dividends to sort out your immediate problem. So they are gaining, and you are gaining. Everybody's happy. The economy is burgeoning, right? So again, it calls for a sit down between the regulators and the critical stakeholders in these industries for this thing to move forward.
Right, and we know definitely the crypto market is not free from regulatory issues at this time, and I believe more will come in 2024.
Most definitely.
We definitely need to set the rules, though, for them, in Nigeria, so that we can also get the benefits, when it comes to
rules are very
that
critical.
market.
Yes.
Thank you so much for coming on. Noble Abasi, Team Lead, Private Equity, Capital Market, Mergers and Acquisitions at Strand & Bland. Thank you so much.
Thank you very much, Daddy, for having me.
All right, Rustin, we're going to head to the markets, and definitely looking at the equities market, we've got another negative close. So this week is looking really negative for the NGX. We see the all-share index dipping below the 100,000 level. And definitely, most analysts, or an analyst we spoke to, did say that if it stays below 100,000, that's the NGX all-share index, there's a risk of further downturn. And definitely, if there's some cherry picking at some point, we should be able to get back because we're about 99,000. We're going to have Ini John McQuarrie to give us the details. And also, everyone wants to know, investors moving away from the equities market to the fixed income market at this time. We've seen what the central bank, MPC, has done with MPR at this time, and we're seeing a massive 400 basis points. And Ini's going to give us the details now. Definitely, Ini, a lot is going on right now, and I'm sure you've heard. We've been talking a lot about what's going on with Binance and definitely other P2P exchanges at this time. And from my last guess, the worry is what are the rules and regulations these guys can play by, so they know what to do, going forward. And we know that the FX market, there's this, we have this thing for blaming a lot of things when it comes to
remember when the former governor of Central Bank also was blaming, some platforms, that display rates and all of that. And we saw a ban on that, but it obviously did not help the matter because apart from, a lot of people have said there are manipulations going on around there, which is even happening among people who have access to this supply.
Exactly.
And maybe not even the people we're looking at and talking about at this time. We spoke to Calvin Emmanuel in the morning, and he did allege, because we don't have proof, that a lot of the BDCs you're talking about, they're owned by either politically exposed individuals or owners of banks. And that's why you see the BDCs, the illegal ones, especially on the streets, you see them having access to supply. We need to deal with those black spots if we're actually serious about dealing with this. Apart from, we know that the long-term solution is getting supply, constant supply, for the country,
but
from
we have to manage
oil.
What we're getting, at this time, so that, we can
There's still a lot of leakages out there.
Too much. Like, when I think about it, it does my head in. It's not easy.
Okay, so don't worry. I'll give you a little bit of, what's that tablet that helps with it? But we have to survive this. We really have to. We do not have another country. So we all have to put our hearts, our mouth, and our resources together to get this thing working.
Even if you have to lose.
For a short while.
To make the Naira strong,
for a short
if you have to lose at this point.
Investors don't want to hear you say that, laddie, please. All right, let's go to the market now. Yes, the fall continues at the NGX. Today it looks a little bit better, at least for now. It's down 0.20%. And we're continuing in that. And yes, we're going to bring that our analysts that predicted or projected that if the NGX drops below 100, we're going down. I don't know how down, but I hope we'll have the time to have him tell us. Looking at for the South Africa exchange, that's the Johannesburg exchange. It's However, in the green, beg your pardon, 0.48 at 72, getting further away from the 74 resistance point that it's been known for. It's now 72,551.13. For the EJX, that's of Egypt, it's positive also, 0.64%. And Kenya closed yesterday in the red, 0.18%. That's from Wednesday's close, and they're still sustaining the 93 points, which they had from Tuesday. So it's a second day of that. Now let's join Abdul Rashid Momo, or let's have Abdul Rashid Momo join us to tell us. He looks into his crystal ball and his graphs and tells us where the market is going. Mr. Momo, you're here again. Now we've gone below the 100. How low can we get at the NGX?
Okay, first let me bust your bubble. Oh. The market's not down. The market is actually up now. The market has rebounded and market is really on fire. Market has gained about 605 points today. So we are actually at about 99,871 now, from an intraday low of about 98,939. You know, basically what happened is when it dropped below, I was very curious about the 100,000 points. That 100,000 points was a very strong support level, and I knew if it broke, there was going to be an issue. But what you need to know is that I've studied market rally for a long time. We don't see 3 consecutive days drop in a market. It's always very difficult. Likely the 3rd day, we are going to see some form of buying into weakness, and that's what we have seen now. Most of the stocks, even traders like us, a lot of people have done a lot of intraday gains today, where you see stocks like Access Bank, Access Core, went as low as 16 naira 10 kobo today, but it's currently trading at 19 naira. So you can see the spread. It's even on full bid as we speak. A lot of the banks have actually turned around, you know, and as I say, the market is always the market. You cannot just in a day, some stocks have actually made 10% gain today alone. And we are likely to see some of these things spill into tomorrow before we are likely going to see another profit taking. Okay, so the most important is that the 100,000 point stays. I feel market is not going to go into that safe zone tomorrow. But for how long it's going to stay, yeah. I can't predict for now. So you see a positive close today? Yeah, no, definitely. I don't see anything dropping the market because most of the indexes are actually in green as we speak. Mm. And do you think these investors are moving to the fixed income space because of the attraction of the yield over there? Yes, you see, one thing you need to know, everything has a price. Even when dollar was going up, right? People sold in strength. Everything has a trend, everything has a price. I mean, when last time you interviewed me on Access, I said when the MD died, you asked if it's going to impact on his stock. I said it's a strong brand, but unfortunately, when Albert passed on, he passed on when the market was actually making a correction. And the correction on Access was heavy. But to speak now, Access is the most traded now on the floor of the exchange. So for every trend, for those people that means a trend, if you see opportunity, you take advantage of it. So that is just plain supply and demand. Yes, we know rates are high and everything, but if people see opportunity, they will take. When they see value in terms of pricing, they will always go back to the market. All right. All right, Mr. Momo, thank you so much. We'll certainly follow up and hope that we regain our 100,000 points today and it's sustained. That's our prayer for the markets. All right, let's just rush through the other market before Ladi comes up. Is the United States market. Stock features fell as Wall Street weighed the latest earnings result, and they still look ahead, of course, to that inflation figure, which will determine the Federal Reserve's inflation gauge. So we see that the Dow Jones is in the red,
0.32%. S&P in the red, and NASDAQ seems a lot of uncertainty. The waiting game is what's going on in the U.S. market. And then from there, we move to the Asia market, which is closed at this time. Stocks traded mixed as investors still wait the U.S. inflation data. We see the Nikkei, even though still retaining the 39,000, it's closed in the red. Kospi is also in the red, as well as Hang Seng Index. When we look at the other markets right there for Hong Kong, with Shanghai, we see that it is positive, very positive. In fact, almost 2%. And Australia also is closed positive at the close of Thursday's trade. Well, everybody's looking forward to that U.S. inflation data that will determine this investor sentiment in the coming days. That's if it's not already priced in as we speak. Laddie?
Right, definitely not an easy time to be an investor in most of these markets.
It's never easy to make money, Laddie.
But at the end of the day, some people still make money. Thank you so
as
much.
Mr. Bobo says, some people make and some people lose.
Exactly.
At different points in time. Thank you.
I pray we all make money. Thank you so much,
Yeah.
Jenny. Well, definitely, let's take a look at what's happening in other markets. Now, we see European markets. Flying regionally has a bad rap in Germany, with many travelers at least trying to opt for more climate-friendly train travel wherever possible. But that's having consequences on the German aviation industry. Lars Holter joins us now. Great to have you, Lars. So what's the problem with flying in Germany?
Thanks for having me, Ladi. Well, it gets harder to reach places, it seems, as airlines have drastically cut the number of destinations. Let's have a look at Berlin. Cities like Liverpool or Toulouse in France have recently been cut from the schedule. From Düsseldorf, destinations including Basel in Switzerland or Tokyo can no longer be reached. There have been cuts in Hamburg too, and in many other major cities that used to have their own hubs. The only exceptions are Frankfurt and Munich. Those are still adding destinations, but generally the number of destinations one can reach directly from German airports is in decline. Now, some of that has to do, of course, with the pandemic a few years ago, when most companies switched from in-person meetings to video conferencing. Also, there is a general trend away from unnecessary short or middle distance flying, and that would be for environmental reasons. In this day and age, it should be clear to everyone that we have to lower our carbon footprint, and flying from A to B for, let's say, a quick lunch meeting is not smart if there are other options like a video call or even train travel.
Right, definitely have to save the planet. What does it mean for Germany's economy in general?
That's the big question indeed, because we're looking at some destinations that have been cut that at first glance might not even need to be served that much. Maybe because there aren't that many people flying there anyway. But for companies in certain regions, having their flights cut translates into a real problem. Look at one example the study highlights. There is that company ZF Friedrichshafen. It is an auto supplier, and they're located in the town of Friedrichshafen at Lake Constance on the German-Swiss border. It is beautiful there, but it's also a little off the beaten path. Now, Lufthansa is planning to cut their daily flight from Friedrichshafen to Frankfurt. The problem, even though they're using that flight a lot less than they used to, sometimes management does in fact need it. Or customers might need it to check out products at ZF Friedrichshafen or meet with people there. With those flights now being gone, every trip brings a detour through Munich or Stuttgart or some other nearby airport, and that costs many hours extra and essentially cuts into the attractiveness of any given place as a business or investment location. And it's something a company cannot really easily make up, especially since private jets have also become too much of a burden for many to deal with.
All right, thanks for unpacking that. What are investors looking at in today's markets?
There's a lot of talk about cryptos again, not just today, I should say, but generally these days. Especially Bitcoin has been booming for weeks now, and today it is once again up more than 5%, sitting solidly above $63,000. Now, just a little over a month ago, Bitcoin was hovering around 40,000. So that's more than a 50% rally in just over a month. And you got to wonder, is this another bubble that is likely to burst any day? It is not. That is what many experts are saying, because digging a little deeper, it seems this current Bitcoin rally is unlike the one we saw a few years ago. This one is driven by financial institutions, not so much individual investors. And this one is also based on the fact that crypto ETFs are now allowed to trade. And that has brought lots of institutional money into the market. Now, how far is it going to reach? I don't know, of course, but at this point, Bitcoin is just around 10% away from its all-time high.
Yeah, all eyes on that Bitcoin former high at this time. We'll see if it hits. Thank you so much, Lars Holter, giving us the details right there from Europe. Let's check out some stories now. World Bank Vice President for Eastern and Southern Africa will arrive for a 4-day visit to Zimbabwe. That's today. The global lender develops a new country engagement framework that will pin work for the next 2 years. A statement at the World Bank said it was committed to working with Zimbabwe to achieve its development goals through targeted interventions to ensure macroeconomic stability and build resilience. And in North Africa now, Egypt signed 7 memorandum of understanding yesterday in green hydrogen and renewable energy with 7 global developers with expected investments worth $41 billion over 10 years. And the signing of the MOUs, according to experts, represents a new step in a series of investment partnerships with major global companies to establish projects in the field of green hydrogen in the Suez Canal economic zone. All right, to our next conversation now. According to the Central Bank of Nigeria, Nigerians spent $40 billion in education and medical tourism in 10 years. And recently, the federal government and African Export-Import Bank, Afrexim Bank, committed to a $1 billion partnership to revolutionize Nigeria's healthcare. Let's get a sense of how to galvanize Africa's health sector. Joining us for this conversation is Brooks Washington, Executive Chairman, Roha Medical Campus. Great to have you on the show.
Good to be here.
So I know you've recently announced a fresh investment for a major new advanced hospital in Ethiopia. How much has been invested and what is the plan for further investment?
So Roha Medical Campus is a large-scale healthcare development in Addis Ababa, targeting both local and international tourism, medical tourism. We've invested just $42 million, which is has been just announced, and actually have put in over $50 million at this point. This is the first investment towards a $130 million first phase that will build a hospital that has 350 beds for advanced medical specialties, serving, again, the Ethiopian local patients as well as international patients. And then also eventually building an entire medical campus with an additional $200 million worth of investment expected in the next few years.
And definitely, when you hear about investing, the health sector, I'm wondering, how will investors earn a return from investing in a hospital?
As you just mentioned, there's already significant spend on healthcare in Africa, across the continent, in Ethiopia. One of the issues, though, is that there are very few large-scale private institutions. And so you have the demand there, but it's not being efficiently met. And so we're quite confident that once we efficiently meet that demand with high quality, best-in-class global operations, a cutting-edge hospital, that then we can get to a sustainable level of profitability. And that allows us to have high-quality, affordable care, but also to maintain a profitable hospital that can continue into perpetuity and, of course, deliver returns for investors.
And with this kind of investment, I guess one would need some kind of patient capital, right? But how patient does this capital have to be?
Well, I'm not sure it needs to be so patient. I think that there's good, around the world, investors are making money on private healthcare, and I don't think that Africa is any different. And so I think that from an equity perspective, I think that, again, operationally efficient hospital can deliver very strong investor returns. And on the continent, the demand is significant. Again, to refer to your number, I guess $40 billion, Nigerians have spent, Africans are estimated to spend $5 billion a year on outbound medical tourism. That includes hotels, everything. And so there's, significant money and resources at play. There's significant demand for high quality healthcare. And so, from a pure business perspective, I think that the healthcare business can be quite attractive while still having, enormous social impact, enormous healthcare impact, and providing affordable prices. We are also, we'll have quite a lot of debt associated with this hospital, and that will be a longer term debt. At the end of the day, this is a greenfield project. Building a 40,000 square meter building, which takes a few years and will take a bit longer to pay back. And I think that that's where patient capital can come in. I think that having debt providers that are willing to look long term is important, as well as equity providers who patience is relative. Aren't going to get their money back overnight, but hopefully won't have to wait until the next generation as well.
Yeah, definitely don't want to wait till the next generation. but how will this hospital address local health needs in Ethiopia while also catering to African health tourism?
So our target is to have affordable care. And so the care affordability is really, if you look around the world, India is a global benchmark in terms of having high quality, affordable care. And I think that is really, the price levels that we're targeting. And I think that if you look at what they do, again, it comes down to efficiency. And so for us, having a hospital that is able to serve patients efficiently, that works 24/7 to make sure that we can get the most out of every single element of the hospital is really important. And what we plan is to have about 75% of the patients be from Ethiopia. There's a high need for improved healthcare in Ethiopia, and then the balance, about 25% from outside of Ethiopia, from other parts of Africa. Ethiopia already sees actually medical tourism from some of its neighbors. And with Ethiopian Airlines, there's a real clear platform for bringing in medical tourists from across the continent. And so that's the path. What's really important to us, though, is healthcare is just, a critical basic need for any person, for any society. And so, we expect this to be, one of the best hospitals in Africa, the best hospital in Ethiopia. And so it's important for us that we make sure that the services are available to a broad range of patients. And so we've agreed with the government that we will actually see about 10% of our patients from the public sector at public sector rates. And that's a core part of our business plan. So, that's our way of contributing and making sure it's accessible to all.
Fantastic. I wish you guys the very best. And hopefully at some point, other continents can come to Africa for medical tourism. That would be great for us. Thank you.
I certainly think it's possible. And this is the first step in that direction.
Right. Thank you so much for coming on, Brooks Washington, Executive Chairman at Roha Medical Campus. Thank you.
Thanks for having me.
All right, now let's get to other markets now. We're seeing, the crypto market is on fire right now with Bitcoin hitting highs that have not been seen in a while. If you look at the screen there, it's green on the screen at this point, but not just any kind of green. We have deep green there for Bitcoin, Ethereum also looking good. Just BNB there with a little pockets of red we see in the markets, and we know BNB, that has to do with the Binance exchange, and we're seeing some pullback there for that market. But other markets there, it's all green, XRP, Solana. Let's look at the sentiment in the market. This market is looking very, very greedy. Yep, there you have it, extreme greed, 80 points of 100. Shows that markets investors are really, really bullish at this time in this market. Let's bring in Emmanuel Anyasi now, crypto influencer and trader. Join us via Zoom. Hello, Emmanuel. Great to have you.
Hi, Ladi. Great to be on this show again.
Fantastic. So, Emmanuel, I'm sure the crypto community is feeling the heat right now. Binance, P2P exchange, that's all over the news at this point. And there's also talk about some Binance executives, detained in Nigeria. So it's looking like crypto investors globally will be looking away from Nigeria with all that's going on. How are you guys seeing all of this?
From from industry perspective, like being one of the people actually in the industry, it's actually very saddening that Binance P2P is actually blocked, or I can say that they removed the Naira P2P has been removed from the market. Also, with the Binance two executive that was reportedly by Premium Times that they actually detained. Binance hasn't made any comments on that. They have not released any report on that. So I think it's all rumor until it's clear that with evidence that, okay, maybe the NSA comes out, the National Security Advisors or anybody from the Tinubu government comes out to say, yes, we actually held these people, actually detained these people. For now, I just assume it's just rumor. But for the P2P, the Naira P2P on Binance, it's actually been confirmed. It doesn't work. It's not working. But how does it affect the Nigeria crypto space or crypto global? I think in the global scheme of things, it doesn't actually add anything because, like I said, I don't actually see our volume, and it doesn't affect Bitcoin. People who are buying Bitcoin, I see buying Bitcoin. Traders who are trading Bitcoin, I see trading Bitcoin. But when it comes to like Nigeria crypto industry, yeah, it actually affects those merchants who is the daily job to actually trade this forex, trade this Naira and USDT every day, who buys and who try and sell to
Okay.
make 1 Naira or 2 Naira again. I
All
think
right,
it affects those
Emmanuel.
people because they're out of market now.
Emmanuel, let me jump in here. We know this P2P market is made up of different kinds of people. Paint a picture for me now. What kind of people trade in the P2P market?
Yeah, P2P, peer-to-peer, it's mostly buyer and seller. It's just like, okay, I have USDT I want to sell for Naira, and somebody has Naira that wants to buy my USDT. So I just go on this P2P platform, different merchants. We just call people who trade there as merchants or traders. So I just list my USDT, and somebody who is interested comes to buy. Or I go to those P2P, or I go to that P2P platform, and I see somebody who I recently listed. I want to buy USD for so and so, and he agrees to my price. I mean, I want to sell my Naira for so and so. I want to buy it. So I just tell the person, makes a bank transfer to me. I confirm it, and I release the funds to them. So what the P2P platform does is to ensure that there's no scam between the buyer and the seller, because there are many scammers every time. There are many scammers trying to show people that if somebody can do fake transfer and you is actually holding such assets will not. We believe that this. But if you don't confirm the payment in your bank account, you cannot release the fund. And if the person doesn't confirm the USD in his own account or in his wallet, he will not release the fund. So that is not how the P2P market is. It's not like there's somebody, a central entity that is paying everybody. No, it's different traders. Anybody who comes, they can prove. But some people, they take it as a job. Like, okay, we can see 1 or 2 Naira there, we can see 3 or 4 Naira there. With the way Nigeria currency is actually dwindling. So people actually tend to just invest in this P2P, buy up USD,
Right.
10 Naira, buy USD, 10 Naira. So it's just how it is.
So the speculators in that P2P market, how big are they?
I don't want to
And
believe that there's any
manipulators.
speculator or anything. Like yesterday, USD was dollar was around 1,400 or 1,314 as the CBN asked PDC people to actually sell. And today it's close to like 1C. So and Binance P2P, which they say is actually because of the inflation of the constant decrease in Naira, they have been shut down since yesterday. So the thing is, I think the federal government and the CBN, they are just chasing, I don't know, maybe goods or something like that. They are not certain. They are not certain of actually what is the cost, or probably they know the cost and they are not going after it. Or if you say it's Binance P2P that is the cost, I think it's a laughable matter. like most people will say, what kind of country is this? Is a joking matter? Because if you look at the Nigeria trading this thing, even when there's enough data about it, you discover that Nigeria is not that kind of high-income country that will be driving those kind of huge volumes. I'm not sure we are even doing much volume a day that will actually be pushing this thing. So
Right.
if ordinary Binance P2P will actually be contributing to a whole country, giant of Africa currency downfall, I think it's something that that we actually need to revamp the whole
All right.
everything in short in the country.
All right, Emmanuel,
Because it's a joke.
I guess you too, I know you also, I want to believe that you also want to see, a strong Naira. So if the government says, let's put a stop to this P2P platforms at this time, let's allow it. Let's see how it plays out. Because at the end of the day, we all want the strong Naira. Don't you want the strong Naira?
I want the strong Naira. Everybody do want the strong Naira, but you have to be productive. Like, are you going to stop people who are buying things from abroad, who are doing business, manufacturers? Are you going to stop them? Are you going to stop people who are buying dollars to send their children abroad, to send to pay their school fees for the children? You know how much, Larry, you know how much all these schools cost abroad? They cost a lot. And people are going for them. People are going for Harvard Business School. People are going for London Business School.
Right.
They are paying so much money. Is government going to stop them?
Okay, Emmanuel, I guess, Emmanuel, it's time for us to all focus on Nigeria at this point, since it's getting really expensive, to go out there for all of this. But thank you so much. It was great having your perspective, Emmanuel. We'll continue the conversation. This is a developing story. We'll continue the conversation another time. Thank you so much.
Thank you, Daddy. Thank you very much.
Yeah, that was Emmanuel Nyaside giving us his perspective on the P2P blockage of Binance in Nigeria. Well, that's the show today. Thank you so much for watching. Hope you enjoyed it. You can also visit channelcv.com for more updates, and you can watch this again on our YouTube channel. Thank you for watching. I'm Ladi Williams from me, the team, right here at Channels HQ. It's bye for now.